Some Atlanta area homeowners' home values are in jeopardy. We're going to tell you exactly who, why, and what can be done about it. I'm Judy Jernigan, the founder of Sage+Grace Realty Group. I'm the team lead and a partner with Clario Real Estate. I have several clients who are interested in buying condos or selling condos in the Atlanta community, and we're running into more and more hurdles as the days go by, and these hurdles are jeopardizing home values in condo communities. But there are solutions and things that homeowners can do to protect their equity. And that's what almost all homeowners want to know, and rightly so, is my home value protected? Is my equity still growing? Is my home still a good investment? Those are the questions you should be asking. So when it comes to condo communities, you may remember many years ago, or not that many years ago, I think it was just 2 or 3 years ago in Florida, there was a condo that collapsed, had major structural issues. After that, condos became under a lot more scrutiny. So being able to buy in a condo community has been getting harder and harder from that point forward. Earlier this year, this was about February of 2024, Fannie Mae changed their guidelines on what they wanted to see for condo communities insurance. So let's back up for a moment and quickly talk about who is Fannie Mae and why does that matter. When someone buys a condo, they usually get a loan to purchase the home, right? A mortgage to cover some of the purchase price. When a local mortgage lender or bank has loans for homes, has mortgages for local properties, what they do is they bundle a group of these mortgages together and they sell them on what's called the secondary mortgage market. A large person, a large entity that buys up these loans on the secondary mortgage market is Fannie Mae and Freddie Mac. Those are government institutions. So if a lender plans to sell their home on the secondary mortgage market, and most do, those loans have to meet certain criteria or certain guidelines before Fannie Mae will accept them. So those guidelines changed. Fannie Mae now requires condo homeowners associations or condo associations to have different insurance policies than most of them have. They require them to have more coverage than most of them have. So the solution is either Fannie Mae has to change their guidelines or those condo associations need to change their insurance policies. Now, condo associations, decisions like that are often made by the board of directors. The board of directors is going to be usually a volunteer group of homeowners who live in that community who have full-time jobs doing other things and are volunteering their time to serve as board members. So the board members have to follow their bylaws, their governing documents, and figure out how to make a change to their insurance. And if the change costs more money, which means like if your insurance premium goes up so that you can get more coverage to meet the new Fannie Mae guidelines, there may be extra expenses that your budget for the condo community does or does not have the funds budgeted for. I don't think that the costs are exorbitant, but I don't know. Leave a comment below if you have any insights on how much the insurance policy coverage is going to have to go up for condo communities to be in compliance with the new Fannie Mae guidelines. So in the meantime, if a homeowner wants to sell their condo and I have a home buyer who wants to buy the condo, the home buyer often gets what's called a conventional loan. But again, that conventional loan is going to often need to be sold on the secondary mortgage market, so it must meet these guidelines. So what's happening is home buyers are finding they're unable to get their loans, which means they're unable to complete the purchase of the home. So this is a problem for the home buyer and the home seller and the real estate agents involved. So what are the solutions? Well, we already talked about long-term, the solution is either the guidelines to change or the insurance policy to be changed or adjusted to meet the guidelines. Or perhaps there'll be some sort of meeting in the middle. I don't know. In the meantime, right now, today, I have clients under contract to purchase condos, and I've closed 2 or 3 already this year, and we've had to figure out workarounds. So one of the workarounds right now is to change from a conventional loan that needs to meet those Fannie Mae guidelines to an FHA loan. FHA is the Federal Housing Administration, and those loans just have different guidelines, different rules to follow. Condo communities, some of them are already approved for FHA loans. That is something that an HOA board of directors and their property management teams can do a lot of paperwork up front and maintain certain standards and maintain their FHA approval. For example, one of the things that I believe FHA requires if you're going to maintain an FHA approval for your community is that no more than 25% of any of the condo units may be rented out at any given time. Leave a comment below if I have that number wrong, but I'm fairly certain 25% is the magic number. So you'll often see homeowners associations have in their covenants that only 25% of units can be rented out at any given time. And that's a video for another day. See my video on rental restrictions and investment properties in Atlanta, where we talk about rental restrictions and rental permits. So if a condo community does maintain their FHA approval status, then that's great, that's easy. Then we can get an FHA loan in that community. If not, then we can do something called an FHA single unit approval, or an FHA spot approval, some people call it. That means the person under contract to purchase the home, the potential buyer, and their lender can reach out to the FHA powers that be and see if they can get an FHA loan approved for that unit, for that condo community. I believe the condo community still has to meet all of those guidelines that they would otherwise have to meet, but the paperwork is much faster, and we're able to get it done within, closings in Atlanta usually happen within 25, 30 days. So we are actually working on that right now with a client. We're pursuing an FHA spot approval for his unit in the condo community. And we have heard that at least 2 other units in the same community have successfully achieved an FHA spot approval. And so we're within the past few months. So we're cautiously optimistic this is going to be the path forward for my buyer client right now. However, there are some things to consider when switching from a conventional loan, which you'd originally planned on, to an FHA loan. So often home buyers will be planning on an FHA loan from the get-go because they're especially attractive to home buyers who have a little bit less saved up for a down payment. You can get an FHA loan for 3.5% of the purchase price as your down payment. They're also good for home buyers who may have lower credit scores. Now, my particular client has excellent credit scores, and he is planning a 20% down payment. So we didn't need an FHA loan to be able to qualify. However, again, this condo unit is not going to be eligible for a conventional loan. So he is looking into the FHA loans. We needed to weigh the pros and cons of how much do you like this home in this community, and are you willing to switch from a conventional loan to an FHA loan? Now, the FHA loan, especially with him being able to put 20% down, is something that he is still okay with. An FHA loan is going to have something called mortgage insurance, which is going to not be required for a conventional loan with 20% down. So that'll be, that insurance is going to be part of his monthly payment. That's an added cost, and it's a payment that's not building equity. As you make your monthly mortgage payments, a lot of that is to build your equity and pay down the amount of your loan, as well as interest. And now there's insurance added in too. So that's a downside. However, FHA loans often have some of the best interest rates around. So I have seen before, especially when interest rates are extremely high, some people choose FHA loans, even if they could qualify for conventional, because the interest rates are so much lower, the long-term plan makes sense for that home buyer. In the case of my current condo buyer, he's actually totally good with the switch to an FHA loan. And I've had another condo buyer who had to make this same switch, again, because of the condo community and the insurance situation. He crunched the numbers, said, you know, how much more is it gonna cost me if I switch to an FHA loan? Fair question, right? But with the lower interest rate, even though there was the addition of the mortgage insurance each month, he was still happy with the way his monthly payments would look and the long-term, how much he would be paying over the long term. Those are questions and numbers that you'll want to crunch with your local mortgage lender. And I can certainly help you with that. So we've talked about the solutions to this problem. One is switching to switching to an FHA loan, and of course, perhaps the condo community changing their insurance policy. There is a third solution, and that is pursuing a private loan. Some people call them a non-warrantable loan. If there's a non-warrantable condo, meaning you can't get a conventional loan for that condo community, which happens for all sorts of reasons, not just this one that we're talking about with insurance. Then there are private lenders out there, lenders who are not going to be selling the loan on the secondary mortgage market to Fannie Mae, so don't need to meet the Fannie Mae guidelines. These private loans are going to vary widely from lender to lender. So it's an opportunity to shop around and see who's going to have the best interest rate, the best loan terms. Also, it may take some shopping around to find the lender who is willing to loan in the particular condo community. This is where working with a mortgage broker can really help make the process easier for you and help you find the best solution to your needs. Generally speaking, private mortgages are going to have slightly higher interest rates than conventional or FHA. But they may be able to make a loan happen where other people can't or won't. So it is an option for solving this problem if you are ready to buy a home and you're running into some of these hurdles. So please leave a comment below if you think I have misspoke or had any of my facts wrong, and what questions do you have about this situation? Have you served on an HOA board? Is your homeowners association struggling with this change and trying to figure out the best path for a solution? Meanwhile, home sellers are having trouble selling their condos. So we're seeing more and more condo inventory, not because there aren't home buyers who want to buy them, but they can't all figure out how to make the purchase happen. Let me know your thoughts. I'm Judy with Sage+Grace Realty Group.